Oh,
Okay, so guys, welcome very much to the webinar that we're talking about with Greg, doing the machine learning about the machine learning class that we're hosting. I'm still waiting for us to go live. There we go. Okay, so now we're live on YouTube as well. So by the way, anyone that's listening here, if you're listening on Zoom, you can also follow us on YouTube. And I'm gonna share my screen really quickly here so you guys can see what I'm talking about. I think it's better than just seeing me speaking. So let me take you. This is us live on YouTube, by the way. You can actually see us here live. If you follow us on Lumi Wealth on YouTube, it's very simple. You go to youtube.com, you search for Lumi Wealth. This is us right here. Follow us, subscribe to us. And first of all, you'll get access to this recording, right? Which I'm sure you guys are very interested in, to make sure that, you want to like look through things and double check them. Or if you guys want to make sure that you get access to the presentation, you can do that as well. Hello, Dika. Thank you very much for responding. Yeah, so if you guys want to get a recording of this webinar, go to our YouTube channel, Lumi Wealth. Make sure you subscribe because we send a lot of free stuff through here. We'll be doing webinars in the future. I mean, Greg and I, we're doing another webinar in, I think, 2 weeks, right? There you go. Thanks for joining, everyone. Yeah, thanks, Greg. Yeah, so we're doing another webinar in 2 weeks. So you guys will see that webinar there. You guys will see any webinars that we do for algo trading, any other courses that we do, any other free stuff. So make sure you join us on YouTube, subscribe to us. And if you want the recording, it's going to be on YouTube. So I just want to bring that up. All right. So again, thank you very much for everyone for joining. This is going to be an exciting session. I know Greg and I have done this 3 times now, and every time I feel like we keep polishing this, it keeps being better. And it's really something very exciting. Honestly, like I think this is the future of trading. I mean, I know this is the future of trading, using machine learning and using AI to trade. So thank you guys very much for being a part of this. All right, can you guys see my screen? Everything's good? Okay, cool. So this is our agenda for today. I'm going to take you guys through the introduction. I'm going to try to keep it short, and I'm going to let Greg take over the show because Greg is the expert here on this topic, and I'm going to let him do the talking rather than myself. But I'm going to take you guys through an introduction and tell you a little bit about kind of Lumi Wealth and our courses and that sort of thing. And then Greg's going to take over, and he's going to tell you about kind of what you guys are really interested in is the details of machine learning and finance and how you can apply it and kind of the details of how to do this sort of thing, right? Okay, cool. So that's our agenda. You guys can check it out. So introduction. So first of all, who am I? I am Robert. I'm the CEO of Lumi Wealth. I teach our algorithmic trading course. It's a very well-studied course. We have a lot of great students in there. And basically what we do is we teach how to build trading robots, right? What we're trying to do as a company is we're trying to expand this out to give us a lot of different types of course offerings, one of which being machine learning. We're planning on also doing options trading. We're planning on also helping you find jobs in the fintech space. These are potential courses we're looking at, but please give us feedback. There's going to be a survey at the end of the webinar. So please let us know what else you guys would like to see, because we're always planning on improving our company and doing better. So yeah, so my name is Robert. Very brief description of myself. I've been coding for over 20 years. I have a master's in finance. I worked on Wall Street for a number of years. Love this kind of stuff. I want to bring essentially what we did on Wall Street over to retail investors, because it bothers me when I see, it honestly really bothers me, like seeing these people that have like billions of dollars getting these incredible returns, 20, 30%, and it's not available to everyone else. So I want to take basically what we had on Wall Street was a lot of technology. And I guess other things are hard to bring around is the relationships, that sort of thing. But I think using technology, we could really bring that over and give these types of tools to the everyday investor to really give you guys access to things that I saw on Wall Street and I'd really love to give to you guys as well. Right. So that's myself. Lumi Wealth, I mean, I kind of alluded to a little bit about what we're about. but that's really what it is creating technology. I want to help you guys bring this technology from Wall Street to help out people to actually create something meaningful and get good returns, even as a retail investor. Even if you have like $1,000 or $2,000, I want you guys to have great returns. That's what we're all about. You know, Lumi Wealth, we want to provide, if it was up to me, I would provide amazing returns to everyone on the planet. Not very realistic. Wall Street to Main Street. Exactly. Thank you, Dika. That's what I'm trying to do, right? Like that's what we're all about. We want to bring Main Street. I want you guys to have amazing returns. I'm all about that. That's what our company is all about. That's why we started in the first place. Kind of taking those returns from Wall Street and bringing it to Main Street. And you know what? I think if we can do that sort of thing, not only is it going to be more beneficial for the everyday investor, I think it'll be more beneficial for the world, right? I don't think it's fair to have these types of keys given to like these billionaires and that's it, right? You know, like let's bring this around. That's right. Thank you, Lucian. Yeah, 100%. I mean, that's what we're all about. That's why we created Lumi Wealth, and that's what we're trying to do, right? So this is one way that we're doing that, the machine learning course. We bring up this course because I think you guys could do really well doing this kind of stuff. I mean, machine learning is the future of finance. Talk about cutting edge. This is as cutting edge as you could possibly get, right? So the machine learning course, let me tell you guys a little bit about it. Over here, we go to our website. By the way, you guys can go to lumiwealth.com. Let me show you how to get to here because you guys can follow along with me. You don't have to just look at my screen. You guys can follow along. This is lumiwealth.com, L-U-M-I wealth.com. You scroll down a little bit and we have all our courses here. I did a webinar earlier today about our algorithmic trading, but what we're talking about here is we're talking about our machine learning course. Greg is teaching this. Greg is a genius, by the way. This is the course that you guys need to take. This is a fantastic course. If you guys are good at programming, if you guys are comfortable building this sort of thing out, this is really a great course to take. So you come down here, you click on this link, machine learning for finance, machine learning for trading. This is where it's at. Okay. We have 3 different plans. We have a self-directed plan, which you guys can sign up for. It's not going to be available for probably another 6 weeks. It's because this is the recordings of the class. So this is basically just the recordings, just the videos. If you guys want that, you can sign up now and you can we'll probably give you a discount or something for going forward. But it's not available yet for this class. But this is basically just the videos. What we're talking about today really is live classes. Yeah. So the live classes, this is awesome stuff. Honestly, people love this with our algorithmic trading course. Basically what you're going to do is you're going to spend 8 weeks with Greg. Greg, he got funded, and I'm going to go into the details in a bit, but Greg got funded $10 million from Google Ventures, from Andreessen Horowitz. I don't know if you guys know these funds. These are the top VC funds in the world, and they're basically funding him to do his machine learning and AI research for the finance field. And your guys are going to spend 8 weeks with him learning about everything that he knows and everything that he knows about creating value and making good investment returns using machine learning in the finance field. You guys are going to spend a lot of time with him together in 8 weeks. We say it's an hour a week. It might be a little bit longer, might be a little bit shorter, but basically you're 8 weeks together, 2 months. You're going to be on this kind of, like we're in a Zoom right now, but this is a Zoom webinar, right? You're going to have a real webinar where you guys are going to be able to turn on your camera, ask him questions, see what, like he's going to be talking about the course. We have a curriculum that Greg will walk you through later on. But basically he'll take you through a curriculum, but you guys can ask the questions. You guys can direct the course. It's not the static thing. It's not like this Udemy or Coursera where it's just, you watch it and like, okay, great. And, this is a live course. Greg is going to be teaching it live. You'll be asking questions and the curriculum will most likely change based off of what you ask, right? So we're going to be developing this thing as we go. And Greg and I, we talked about this, and I know you agree with me, Greg. We want to add value to you. That's what we're all about, right? So this live class is absolutely fantastic. This is the main option, I think, for both our algorithmic trading class, but for the machine learning course, even more so because we don't have self-directed yet, right? So this is the option to choose. We also have another option here of project help and tutoring. If you guys want to build a specific project, if there's something that you're looking for building out, talk to myself. Depending on what it is, we could either do at Lumi Wealth if it's simple. If it's something more machine learning oriented, we send it over to Greg because he's the expert. And these guys, not only is Greg very good at doing the machine learning aspect of it, but he also has infrastructure. I think you guys spent 3 years building this, right? three man years, I think you said. Yeah. So not only does he know his stuff, but they also have a lot of infrastructure built to do this sort of thing. So if you guys are interested, this is kind of that plan. Really, I think if you want to do this plan, you should probably talk to us. These are our pricings. We have the live classes. We don't have the self-directed available. If you really want the self-directed class for this, talk to us. We'll give you probably a discount for when it does come out in a month from now. Realistically, the only option for this class is live classes because it hasn't happened yet. This is brand new, guys. This is absolutely brand new, cutting edge kind of stuff. You join the live classes with Greg. You guys can ask him questions, learn about the machine learning, that sort of thing. We also have just because everyone's asking for this, we've put together something where you get machine learning and you get the self-directed algorithmic trading. So you get to learn about algo trading from a self-directed perspective. And then you also get the machine learning live with Greg. That bundle together is $2,700. So you can get that as well. And then of course the project help and tutoring, as I was saying before. We could talk about what is machine learning and all sort of thing. I want to leave this mostly for Greg because he's the star of the show. I want to pass it on to him. But there's a bunch of stuff here on the website. I hope you guys come to the website, check it out. I mean, you can listen to what we're saying, but also read it. We spent some time building this out. There's a course curriculum, right? I'll let Greg kind of take that over, right? Because he's the one that's going to be teaching it. There's 2 projects and 2 very, very cool projects, by the way, guys. One of them is using machine learning to trade, which we're going to show off today, and you'll see great returns. And I think there's something special happening here. I think if you want to get really good returns, I hosted a class yesterday, by the way, and everyone talks about technical analysis all the time. Technical analysis is great. It's better if you could do something cutting edge that not a lot of other people are doing, right? And that's what this really is, right? So that's what we're going to be showcasing to you guys today. And then we're going to have another webinar later on showing off this last project, which is, the GameStops of the world, the looking at Reddit, that sort of thing. We're going to be doing another project on that. I'll let Greg take that over as well. To let you guys know when the class starts, it starts March 30th. Registration cuts off March 23rd, so it's coming up very soon. Was that less than 3 weeks? So make sure you guys sign up. It's coming up very soon. Our classes sell out all the time. So make sure that you reserve your spot, sign up soon. Registration closes officially 23rd, but if we get too many signups, we will cut it off. So just to let you guys know, that's the situation there. Course starts March 30th. It's 8 weeks long. We recommend 8 to 12 hours per week in self-study. It's every Tuesday at 8 p.m. Eastern or 5 p.m. Pacific. And I know Greg is in California, the mecca of the tech world. So for him, it's 5 p.m. Pacific time. And it's about 1 hour per week, sometimes an hour, sometimes a little longer, sometimes a little shorter. So does someone need programming knowledge to be part of this? What programming language is required? So that's the question. Yeah, so this is a little bit more of an advanced course, to be honest with you. You don't need to know how to code. If you don't know how to code, I'd highly recommend that you take our course right here, the middle one, the self-directed. This is a bundle. We specifically put this together for people like you, right? If you don't know how to code, if there's something brand new to you, what you do is you take this course right in the middle here, okay? We'll teach you how to code, because that's what we do with algorithmic trading. We teach you how to code first and foremost. We teach you basically the basics of data science, and then we teach you how to build algo trading robots. And then once you take all that, you'll be ready for Greg's course. Greg's course is a little bit more advanced. It's the machine learning course. But if you take this one right here in the middle, this machine learning live class, it's only $200 more. It's like nothing more. Like honestly, the class itself, the self-directed class is $500. So you're getting a really good value here. you're saving $300 by taking this. Take this middle course. It's going to teach you the basics of Python, data science, and algorithmic trading. And then when you take that, you're going to be very, very ready for Greg's course. You're going to be even more than ready. When you take Greg's course, you're going to be flying through it, right? So we specifically designed this for people like you because we had this question. I can't even tell you how many times we had this question. So we specifically designed this for people like you, all right? Thank you very much for that question, by the way. Okay, so I think that's it around the course. I'll let Greg take more of this. He could probably explain the 2 projects better than I can. He can explain to you the curriculum better than I can. So I'll leave it to him because he's the star of the show. So we're gonna leave it there. I'm gonna keep going here. I'm gonna say, we talked about who I am, Lumi Wealth, the course. Again, I got to mention our last course sold out. These things sell out all the time. So if you guys want to sign up, make sure you sign up soon. I know the registration date is not for another 2 weeks, but believe me, these things sell out really quickly. So make sure you sign up soon. I want to make sure you have your spot. And then make sure you follow us on the YouTube. Again, the Lumi Wealth, go on YouTube, search for right there, LUMI Wealth. Subscribe to us. We give you a lot of free stuff. We're going to be giving out, by the way, I'm going to be giving out snippets of our lectures very soon. So if you guys sign up there, you'll get this free content from YouTube. It'll be pushed to you automatically, right? Make sure you sign up for our Discord channel. Here's a link. Basically what it is, it's our chat. There's a lot of stuff going on here. We started a recent thing here. There's a channel here about if you want to create an algorithm or if you want to buy an algorithm, we're trying to create like a little marketplace here. There's a channel for that. This is our channel for our current class. This is a general channel, which has a lot of really cool stock advice and tips and a lot of people talking through it. There's lots of cool stuff happening here. It's a great community and I highly recommend that you guys join this. You can talk to past students, you can talk to future students that haven't even signed up yet, like people talking about this sort of thing. Or you could just hang out and, talk stocks, we all love that sort of thing. This is what I'm all about, right? And I'm sure Greg is too. And again, I got to mention survey. We're having a survey at the end of the webinar. We always want to make this better. Every single time we do this, we get survey results and we keep making this better and better and better, guys. So not only is it for this webinar, but it's also for Lumi Wealth. It's also for a course. We want to make things better for you guys. We're very, very involved in our customers. And I think that's the only way to run a company. I don't think a company exists without customers, right? So please give us your feedback so that we can do a better job for you guys. So we can get a better course, better company, better webinars. And that's what we need to do, and that's the only way to run a company in my mind. So please tell us your feedback at the end of the course or at the end of the webinar. There's a survey that will come up and please fill that out. Thank you very much. Okay, cool. So that's my spiel. I'm gonna leave it here because again, Greg's the star of the show and I want him to walk you guys through this. But I want to give a little intro to Greg before we start, so you guys know because Greg is very modest. You guys got to know this. Greg is a very modest person. I think he went to all the best universities on the planet. Caltech. He's at Stanford right now. He went to Berkeley. He got funded $10 million from Google Ventures and Andreessen Horowitz. The top 1% of the 1% of the 1% smartest people in the world, right? I know Greg is very modest and he would never say this about himself. So that's why I'm saying it, right? Because we need that kind of introduction. But that's kind of the spiel. And I'll let him kind of tell you a little bit more about his background because, he obviously knows more about his life than I do. But I know the highlights and I'm very excited for him to start this course. By the way, I'm going to be taking this course as well. So I hope you guys join in as well. All right. And without further ado, I'll pass this on to Greg. I'm going to stop sharing my screen and give Greg the screen sharing permission if you don't have it already. There you go.
Yeah, I now have permission. Thank you. So Robin, thank you so much for that warm introduction. And thank you everyone for attending our webinar. I have the chat and Q&A box open. So if you guys have questions, just fire away and I'll try to answer all of them. So let me go to the slide we're on. Let me go full screen here. So I think Robert kind of summed up my background pretty well. So I'm a Caltech Berkeley alumni, started doing a lot of engineering, 3 startups. Oh yeah, Paul's asking, is this live? It is live. So Paul, as you ask questions, I see it and we can answer them. And so I learned, I've done a lot of stuff around computer vision, a lot of work around time series forecasting, um, and natural language processing. So a lot of stuff around machine learning, and I'll talk a little bit about Pico Group a little bit later. So let me kind of dive into it. I want to try getting most of the content going by 6 o'clock. But of course, if there's question interactions, we'll answer the questions. So the core of trading is forecasting, right? Because what you're doing is you're making a bet when you get into a position that is going to change in your favor in some way, shape, or form. So when you buy and sell security, whether it's Bitcoin or stocks, or in this case like TSG, the Stars Group, a stock, you're basically betting that, the old adage, you're buying low, selling high, right? That's the adage, right? So you got to forecast. You have to have some sort of way of forecasting how this is going to be. Now, the really old school way of doing this is using, technical analysis, traditional indicators like RSI or Bollinger Bands. There's a bunch of them. There's probably over 100 of them out there. And the way these technical indicators work is, depending on where they are, it tells you, oh yeah, it's TSG is going to be on a run now. So we're gonna want to get into the market now and then exit at a certain point. But as you can look at this RSI indicator, it's a pretty fuzzy indicator, right? It's not necessarily so clear as to exactly when do you buy, when do you sell, and like, directly if it hits this line, you sell. If it hits this line, you buy. But as you can tell, it's pretty fuzzy things. But basically, what you're using these technical indicators to do is to forecast the future price of the security. That's essentially what you're doing. Now, the problem is that this stuff is pretty much, everyone kind of knows it already, and it's already deployed, right? So the problem is that a lot of the easy money, so to speak, has been already taken, right? So if you look at, and there's a great website if you guys don't know about, it's called Seeking Alpha, and on Seeking Alpha, it talks about how algo trading dominates 80% of the stock market. So if you look at the stock market, the U.S. stock market, most of it is actually algorithmic trading. And what these bots do, these are institutional bots. These are bots that the big investment firms out there have, hedge funds and whatever. They pretty much are scooping all the easy money, right? All the easy money is largely taken by them. So most of the profits are swept up by that. And so it's harder and harder to actually make money as a day trader, because what's left actually are, and an analogy I like to use is like there's pennies on the street, right? So if you see a penny on the street, you may walk right past it because it may not be worth your time to pick up that penny. In the old days, before algorithmic trading became so dominant, there would actually be $100 bills once in a while on the sidewalk, right? These days, because of all the algorithmic trading, all the bots on the market, there are very few $100 bills on the sidewalk. Okay, most of what you see on the sidewalk now are pennies, and so for a day trader, you could pick up these pennies, but it's not a lot of money, right? It's not a lot of money, especially if you have to do all of it manually, and this is what kind of led to the interest, especially on the individual day trader level, to do algorithmic trading, is because it's not so bad to earn pennies as long as you can do a lot of that quickly and automatically, right? But if you have to pick up pennies manually, you may just not want to do it. So essentially, what you could think about what we're doing is we're automating the picking up of these pennies much quicker. Now, the other problem with like traditional trading indicators is that they don't have the capacity. So the way to know how much intelligence or capacity a model has is how many parameters it has. And these really simplistic indicators like Bollinger Bands or RSI, like some of those I mentioned earlier, is that they have very few parameters. So the ability for it to detect or figure out a complex forecasting pattern is really low, right? It's very simplistic. And so And because with all the existing bots and algo trading that's done on the stock market right now, it's really hard for individuals to get an edge, right? To be able to basically make money when others don't, right? Because the stock market is essentially one big zero-sum game, right? If in order for you to win, somebody else has to lose. That means you have to have some sort of edge over someone else. Otherwise, it's going to be really hard to make it. So this is the motivations why there's so much interest, especially on the individual level, to do algorithmic trading. Now, what is machine learning versus like traditional indicators? So traditional indicators could be something simple like, the moving average, right? Just the average that moves with a sliding window. So it's very, very simple, easy to calculate, easy to understand. These kind of came out because, back when these indicators started being developed, computers were not as prevalent as they are today. And the big problem with them, as I mentioned, is that they have very few parameters. They're not taking that many inputs. So there's very limited ability to factor in different information, right? It's not taking in what's being said on Reddit, on Wall Street Bets or something like that, right? It's pretty much just very just basic historical information. And the biggest problem is really is too popular, right? So everyone knows about these technical indicators. And it's really hard to get that edge, to really kind of edge out someone else. Now, machine learning, this has really been enabled by the fact that everyone has a supercomputer, right? I mean, computational power is really easy to get. The other factor is that the algorithms, the models have gotten really, really good. And then the APIs out there have become really good. So, at one point in time to do machine learning, you had to be a PhD. Today, you don't have to be. It's the ability to do machine learning and actually have something useful has actually kind of gone down to the realm of a normal human being. And the really great thing about machine learning, especially with something called deep learning, which is kind of like machine learning on steroids, is you could factor in lots of different information. So for instance, you could train it on Reddit, right? You could train it on Twitter. You could train it on a whole bunch of on the newswire. You could train it on a bunch of different things that you could never do with traditional indicators. And it's very cutting edge. So very few individual day traders are doing algorithmic trading. Even fewer are doing machine learning. Even institutionals, very few of them actually are doing machine learning. And the reason why is because a lot of the institutionals, they want strategies that are explainable, right? And machine learning, unfortunately, is a little bit black box. So because of that, a lot of institutionals have not kind of got into it. But the ones that have, you look at like Two Sigma, right, or Renaissance Technology, the people that have behind those firms have become like some of the wealthiest people in the world and some of the most successful hedge funds in the world. So definitely machine learning makes a lot of sense. And it's something where it's a way to get that edge that you couldn't normally get. So what is machine learning? So first you have to understand what is conventional programming. So conventional programming, for a lot of what machine learning people do is they use Python. So Python's used here, it's also used here, right? So you think, well, what's the difference? Well, the difference is what conventional programming is. You have some sort of data, like maybe historical sources. You have a program that's written in Python, and then it spits out a result saying buy here or sell there, or here's what we think it's going to be. So it takes in data in a program and spits out a result. With machine learning, it's actually quite different. It looks like a very similar diagram, and it is. But instead of putting in the program, what you're doing is you're putting in the data plus the results. So what you're doing is, it's very much like the way a human learns, right? So most humans don't learn by a brain surgeon going to their head, sawing it open, and wiring the neurons all over the place. That's actually what's happening here, right? You're basically hardwiring the computer to do something. What's happening here is so someone said supervised learning. This is essentially supervised learning, right? So what's happening here is you're putting in the data. This is the data, and then you put in kind of like what they call ground truth. Like, what is the result? Like, this is what the stock price actually was, right? And this is the historical data. So you're training the model to learn how to predict, right? Or when to trade. And so what it spits out actually is a program, right? And this comes in the form of weights, like in a neural network. It's the weights of a neural network. And the really great thing about this is that it could solve problems that you can never do explicitly. So this is explicitly, right? Basically, you're telling the computer exactly what to do every clock cycle of that CPU, right? Here, basically what's happening is you're teaching it, right? You're teaching as you're teaching teaching someone, right? You're like you can think of yourself here like a instructor, and you're teaching the computer how to learn about some sort of pattern. And because of that, you can do amazing things. I mean, it's been a revolution in computer vision, and been a revolution in natural language processing, in translation, in terms of just the ability to really kind of figure out these complex patterns and come out with very powerful insights that you can never get otherwise. Oh yeah, like speech recognition. That's a good one, Lucian. Speech recognition. Yep, exactly. So speech recognition used to be like a kind of a hard problem. Today, it's pretty much a solved problem. It's pretty damn good. So that's what machine learning is, right? It's kind of turning the problem on its head. It's making it more like the way humans learn something and know how to do something. Is through examples, right? Here you're basically hardwiring it, right? But for instance, if you're trying to hardwire how you can recognize a cat, pretty hard to do, right? It's pretty hard to program a computer to recognize a cat, but it's not too hard to train a model on how to recognize a cat. So, let me talk a little bit about my company, Pika.group. You guys are welcome to go to Pika.group. It's our website. And what we do is, as Robert alluded to, is we mainly work with day traders who have some sort of algorithm or some sort of trading strategy that they want to automate. And a lot of the reasons why behind this, what I said before, which is it makes money, but it's a lot of work. You got to kind of be there all the time, and you got to do a lot of trades, right? So a human could do maybe a trade every 5-10 minutes, maybe, right? And that's a lot of work still. But algorithmically, you could do 10 trades a minute if you want. You could do a lot of trades, right? And the advantage of that is you're able to scoop up these pennies off the ground. Like so picking a penny off the ground manually, it kind of sucks, and it's probably not worth someone's time. But imagine you could do it automatically. Then you're in business, right? Then it makes sense. So that's essentially what we're doing. We're taking strategies that people know that work, and we're just automating the heck out of it so that they could scale it up, right? They can make, each trade doesn't make a lot of money, but doing a lot of trades actually adds up. So we do that. We do that on a consulting basis. And then we have a platform which we host it. So the challenge of doing algorithmic trading or even machine learning on your own computer, like my I'm watching my video, my video is really stuttery, so hopefully you guys aren't seeing this. But like if you're running your algo on your computer at home, it's you put a lot of money at risk. So a lot of people like to have it hosted in the cloud because we use Google Cloud, which has excellent connectivity. They never have this. My video is stuttering like crazy right now, so I'm hoping you guys aren't seeing this. But anyways, when it's hosted in the cloud, you have excellent connectivity. You have Google like making sure that the computer are up 24/7. So you have faster execution times and more reliability. So it's probably my kids are doing YouTube right now or something crazy. That's what's probably happening. So you don't have to watch your neighbors watching like Netflix or something like that. Anyway, so we host it in the cloud to provide all the maintenance and all that. We provide a user interface, and I'll show you that user interface of how to activate it, how to see what happened, look at the visualizations, and then we have the failsafe, which is actually really important because with machine learning, especially, but algo training in general, you want to have safeguards. There's stories you probably read about in the press of like mega funds getting collapsing overnight because some trader made a typo in the program and they just lost a ton of money. So you want these safeguards. So we have these safeguards which automatically halts the algorithm if there's a problem. And then backtesting is so important. And I'll talk a little bit about this today. What you want to do, you want to backtest the heck out of your strategy, make sure it really works, the algorithm and the machine learning model really works. And then you do paper trading, make sure it still works, and then you do live trading. That's really important. I know a lot of people get excited, like, oh, I want to try this with live trading, and that's a mistake. You never skip backtesting. So that's really important. And then we have a suite of machine learning models. So, why do people do machine learning? Well, one reason is so there's something called a Sharpe ratio. So what Sharpe ratio is like the risk divided by the standard deviation of the portfolio excess return, right? So basically, it's a way to measure the performance. The Sharpe, anything over 1 is actually pretty good. For machine learning based investors, they can get about 3.3, so it's pretty amazing. And then in terms of compounding annual growth, CAGR, compounded annual growth rate, 42%, which is pretty good. So that means if you started with $100 end of the year, you get like $142. So pretty good, right? So this is compared to like, I think average for S&P 500 is like, maybe 10%, something like that. So this is way, way better than that, way beating market. Just to be really clear, we're not registered investment advisors. So the way we think of ourselves is we're like, if you think about a hedge fund, there's two parts of a hedge fund. There's the traders, the guys with the ideas and the strategies and the capital. And then the back of the house are like the programmers, the machine learning engineers who implement the trading strategy. So we're like the back of house. We're not investment advisors. We're not registered. So everything what I'm talking about here is just not a reflection of what you'll get. It's just purely information, right? So it's not guaranteed what you will get. So Lucian asks, what is the best cloud service? So the most popular one is obviously Amazon. Amazon Web Services is by far the most popular. But in terms of machine learning, I think Google is probably the strongest. So if you look at the computer vision, if you look at the their NLP, natural language processing, they have some of the strongest offerings. Amazon's not far behind, but I think Google is a little bit further ahead. And then Azure, I'll put last. Although Azure has good cloud services, just not as strong in terms of machine learning. And that's why we're on Google Cloud, is because the machine learning offering is really strong. Let's see, I lost my mouse here. Oh, okay, here it is. Okay, so what are the tools we're using? We're using something called Alpaca, and this is really revolutionary because Alpaca is kind of like the Robinhood, but for algorithmic trading. So before, if you want to do algorithmic trading as an individual, you had to have like, a seat on the stock exchange or something crazy like that. Now, there's guys like Alpaca where you have these really great APIs where you could trade for free. Now, you still have to pay the bid-ask spread, but it's largely free. So that's why Alpaca is very, very popular. And that's what we're using for the class. You can sign up for free. You get access to live real-time quotes for just $1. So for $1 in account, you get live access to live accounts. We're using Python. So Python is probably the easiest. So I've been programming since I was 6, right? So I won my first programming contest when I was 7. So I know I've been through a lot of different programming languages. And Python, you guys will love it. It's a very easy to use, very expressive language. So not too bad. Pandas is a library. So Python is known for its amazing library. It has like libraries for just about anything. Pandas is kind of like a gigantic Excel spreadsheet that's really fast. So you could do a lot of kind of crazy manipulations with pandas. And then we're using TAs. This is a technical analysis library, a Python library. Scikit-learn, this is like a really basic machine learning library. There's a lot of fancy ones out there like TensorFlow and PyTorch. I'm not gonna get it in the case for the demo here. Google Colab. So here's a great thing. This is the best deal on the net. Google Colab is completely free. You could go there and then you could they'll actually host it. You could actually run stuff there. Now you have to keep it alive. It doesn't run overnight, but it's a great way to actually develop a program. And it's example I'll show you here. So it's totally free. Maybe not as free as it used to be. They have more restrictions on it, but it's still really good. And then Google Cloud Platform, which I mentioned earlier. So the code. I'll show you how we kind of get it set up, how we use Alpaca, how we set up the training data and the test data. I'll talk about how we train the model, we generate the predictions, and then analysis of the results. So let me jump to my other screen, which shows the Colab. So Colab is something they call interactive Python. And so what's really nice about that is it's like probably the easiest way to learn how to do programming. You have these ideas of cells. And so in this case right here, what it's doing is just installing all the dependency, all the libraries that we just talked about. And then, one thing I always warn people is don't put your credentials in code. So we use Google Secret Manager, and pretty much all the cloud services have secret managers, but I would never store it in code. It's just dangerous, especially if it's your brokerage account. So then basically you just activate the Alpaca APIs. And then what we're doing here is we're setting up, so we're just using a stock called SRNE just because it's very volatile. So it makes for an interesting demo. And what we do here is we're just basically specifying the training period. So they were specifying like a month worth of training. So like from June to July. And then what you see down here is all the different indicators. And you guys will probably recognize these, those delta, EMA, Bollinger, comma, your favorite technical indicator. And what this example is doing is it's feeding into the model all of these technical indicators. They're what you call in machine learning speak features. The features that are going into the model. And what we're doing is we're training it on the close price of the stock. So like what is the based with all these kind of technical indicators, what is the stock price 15 minutes in the future? So that's what the trained data is doing, is providing this. Going back to my diagram earlier, it's basically the data is the features, all these technical indicators, and the results are what the stock price is in the future. And what it's spitting out is a model that helps predict what, given these two things, or given the data, what the forecasted stock price will be. So that's essentially what's going on here. And then the second part of it is testing it to make sure it actually works. So same kind of setup, right? We want to see, okay, given all these technical indicators, what is the stock price going to be? So that's what this block of code is doing. And then so we get that all set up, ready for the model. And then for training the model, what we have to do is, and time series forecasting is actually quite interesting. So with time series forecasting, it's different than training a model for non-time series problems. So most machine learning today is actually with non-time series, like recognizing cats or dogs or something like that, or finding out the sentiment of a sentence, like in the case of NLP. With time series forecasting, what's going on is you have this idea of like an expanding window. So what you're doing is you have this training data, like in the case of June to July, and then it expands out as time goes on, right? So you basically want to, and that's why there's this for loop here. You want to expand it out. So every 15 minutes, you do retraining and then you expand it out. And the reason behind that is you want to minimize what's called forecast distance. So you only want to be forecasting 15 minutes in the future. And the reason for that is because as you increase the forecast distance, right? If you try to forecast a year from now, it's much harder to forecast a year from now than forecast 15 minutes from now. So that's why you keep expanding the window of the training data so that the forecast distance is only 15 minutes in the future. So that's what's going on here. So we do that, and then we generate the predictions, right? So you can see what the close is, and then you could see like what the predicted is, right? So let me show you what this looks like. So so basically, what you could see here is there's the close price, which is the blue line. The top one, closed, is a closed actual ground truth, and the predicted is the kind of like orangish line here. And as you can see, it's pretty good. Now these streaks are because there's weekends and the market's not open 24/7. So that's what you're seeing here. So you could see visually it did pretty good, but again, we're only forecasting 15 minutes in the future, so not terribly hard to do. And then you want to see, you wanted to analyze your model to see, well, what worked, why did it work? So you could see here, for instance, RSI, and there's a reason why RSI is a very popular indicator, is it was very predictive in terms of what the future stock price is. So it's a very important feature. The other technical indicators in this little example here didn't do a whole lot. So so you could kind of understand, do some feature analysis, see what's going on, and then you want to look at it more quantifiably, like what's the error rate. So you can see in this case here, I mean, you can see the orange line is almost on top of the blue line. So it's a very low error rate. So it's like a 0.72%. So like less than the 1% error rate. So really low error rate. And then you can see the mean squared error is pretty low as well. And this is what you use when you develop your machine learning model to figure out, like, is the model good or not, right? You could kind of look at a visual inspection, but you want to really look at it numerically. Is it good or not? So this is the forecast model. This model is what we're actually going to be building in the class. And so this gives you kind of the fundamentals of how to do time series forecasting with machine learning. Okay, so jumping back to the slides, let me go back to presentation mode. Oops, let me see here. Okay, so that's that. Now, the second part of this is you have a forecast, right? Now you actually have to do something with it. You have to do, you have to actually trade a stock. So in the demo I'm going to give you after this, do you put it? Yeah, so one question Lucian asked is, do you put it into production like software? Yes, you do. And so kind of what, as I said, what you do is you start with back testing. You back test the heck out of your trading strategy. Then you do paper trading, like not with real money. Then you go to live. So that's kind of like the flow. It's kind of like what people do for software. That's how you go to production with it. You kind of test it, right, before you actually, push the release out. So it's a similar thing. So that's what backtesting is really testing it. And I'll show you on the Pika platform how that works. So this is a very simple trigger, and triggers could be something simple like this, or it could be something really complicated like a reinforcement trigger. Those are really popular for like a low float type of stock when there aren't that many people trading the stock. So the way this trigger works is simply if the close price is less than the predicted price, right? So if your close price is here and your predicted price is here, then you want to buy that stock. You want to go long, right? That's what this statement is saying. Else, right? If the close price is higher than the predicted amount, then you probably want to sell it. Or if it's not within a certain threshold, then you probably just hold it. And Attendee here asked, does backtesting include in and out of sample testing? Yeah, so that's actually really important. And that's one thing that's really easy to do with time series forecasting is you got to make sure that that when you train the model, you're not testing it out of a period of time when it's seen the answer, because it's very easy for models to memorize what's going to happen. And so that's something that's really key. You got to make sure the future never leaks into the past. Otherwise, you can really fool yourself, right? And that's also why you do a lot of back testing, is because you want to make sure that when you train your model, the model's not cheating somehow, right? So let me give you a quick demo of how this works. So let me go to my other screen here. Okay, so this is our website, Pika Group, right? And so you just click on this to algorithm deployment, and that takes you to our web app here. And then yeah, so what you do here is you just submit a job. So we support Alpaca and Interactive Brokers. And then, yeah, in this case, we can do a back test. You could specify also how many retries you want to try, because Alpaca is a very popular service, and so a lot of people are pounding on it. So you could say how many times you want to keep trying. And then, when you're pretty sure about your trading strategy, you want to include the bid-ask spread, because while there's no commission on Alpaca, you do have to pay a spread between the bid and the ask. So so you want to do that when you're pretty sure, but normally you don't do that until you're pretty sure, because it's a lot slower if you do that. And then like in the case I showed you earlier, we retrain it after every 15 minutes. So that's the best, but it's more expensive computationally. So when you're first starting out with your algorithm, you may not do that. You will probably do that as you get more and more sure. You do finer levels of detail, right, of the simulation to make sure it works. So we're gonna do this on the 15th, starting on 15th, and then the market opens. So this is in Pacific time. So the market opens at 6:30 a.m. And then we'll do it for 2 days, and then we'll do it until closing time, which is 1 o'clock Pacific time. Okay, we start with $10,000 cash, and then we're just going to do the simple one. So the simple one is just the one I showed you earlier. It's literally, this is the code that runs, right? It's as simple as it gets. Okay, and then I showed you that threshold before, right? That let me see, this threshold, right? So this threshold is specified here. Like, you don't want to have it at 0%, because otherwise it's just buying and selling too much, and then you eat up any profit margin in the bid-ask spread. So you got to have a certain percentage, like, so you don't want to make it like 20%, right? But you want to have the threshold set at a certain level, so that if the forecast price is high enough to justify the bid-ask spread, because the bid-ask spread when you're trading a lot becomes kind of a factor, so you got to be careful of that. And then In terms of stock, I'm just going to use something called SNDL. It's just a like low cap stock. We're going to trade 3 stocks at once. We're not going to set a maximum position. So that means as long as it thinks the price is going to be higher, it'll keep on buying. Or if it thinks the stock price is going to be lower, it will short the stock, right? So it'll keep going either way, but there's no max position. And then do we want to sell your leftover stocks after trading bot has ended its lifespan? And in this case, we're just going to say no. But sometimes people want to exit. And I would advise, especially when you're starting off, you kind of want to exit your position at the end of the trading day. You don't want to carry it over to the next day. When you get more sophisticated, maybe it's okay to carry it over, but generally you want to just kind of stick with short-term trading. Okay, now what model? So I showed you a random forest model. So that was the model that I just showed you. So this is the forecast model that runs. We just used a simple random forest model here, random forest regressor. So that's the model that we're using here. So we're just picking random forest, and you can see we have other ones. We have a lot of other ones as well, but random forest is the nice one because it runs fast. And it's pretty easy to understand. In this case, we're just going to do 15 minutes in the future, and then we're going to trade every 5 minutes. So that's kind of like how our service works. So this is the setup of our system. So we would build, let's say, either a custom trigger or a custom forecast, and then we would host it on our platform, Google Cloud. And then there's this is the interface that you would have. And so yeah, so this is how it works. Oh, time scale. Sorry, we got to specify minutes, and then we could kick it off. Okay, good. So now it's kicked off, and then yeah, then we can see live job here. It's running for SNDL, and it's going to run. But just for the sake of time, I have the results already right here. So basically, the result of that run is, you start off with $10,000, and then you ended up about $10,080, right? So this is a very short period of time, right? Just a day or so. So if you look at the compound annual growth rate, let me kind of show you some of the stats here. This one was really nice. It's a Sharpe ratio over 1 is usually good. Compound annual growth rate, 705%. Now, there's no promise of future results. This is just an example of what happened here. You say, well, gee, you only won 40% of your trade, 47% of the trades. And well, that's because, and you can't really see it here because, you're losing less than a penny. You can't even see it. So even though you don't win all the time, the amount you lost is really small, right? It's like the max you lost was like 2 cents, right? So so you netted $81 here, and that's why the compound annual growth rate is really, really good. So this is an example of one. It's very simple forecast, right? Just using a random forest model, using simple technical indicators, forecasting what the stock price is in 15 minutes in the future. The trigger looks at see if in 15 minutes future is going to be higher or lower, and every 5 minutes, right? So every 5 minutes, it's looking 15 minutes in the future and trying to see is the stock price higher or lower, right? It's very simple, higher or lower or within the threshold, and then it's triggering trades off of that. So if you could, it would be very hard to do this manually. Let's put it that way, right? If you imagine trading every 5 minutes, right? And then doing the calculation of the forecast, right? Using, we had about 20 technical indicators. Doing that manually, super hard to do, right? Not too hard for a computer to do, right? And then let's see here. So let me show you. So you can see here, this is the buying and selling that's going on. So now this is cumulative. Oh, someone asked, what is? Oh, sorry, I've been missing some questions here. Evan Nash asked drawdown. I guess I'm not sure what the question is about drawdown. So Evan Nash, maybe just expand a little bit more. And then I guess I'm not sure he's talking about the downside volatility, but I'm not sure what the question is other than the statement. So Evan Nash, maybe just expand on your question there. And then Lucian asked, we will also have the opportunity to be trained. Will we also have the opportunity to be trained how to build such an application? So that the course is really about um, really about building these forecast models, right? And then the trigger is actually Robert's other course, right? The algorithmic trading. So the triggers you would use a forecast like the prediction to do the trading, and this is more the algorithmic trading course. What we were talking about here is really um, the forecast, right? The forecast is kind of like the brains behind this, right? Because you got to know is it going to be higher or lower. How do you decide, right? How do you algorithmically decide? And you decide using like machine learning, right? So I'm getting short on time, so I'm gonna try to keep on going here. But let me see here. Um, Cumulative win rate. So I could probably explain that with this. So what this is doing is every 5 minutes, right? At this time period, it's trying to figure out like in this hour, is it going to be higher or lower, right? And in this case, it's thinking the price is going to be lower, so it's shorting. Essentially, it's shorting, right? So it's like it's shorted a lot in this hour, less so this hour, and very little this hour, and then it keeps doing that. And then what's happening is it then started forecasting the stock's price is going to be higher, so it starts buying, it starts going long, right? And then you see that every hour how much it's doing, right? And I specify only 3, right? So it's only doing 3 shares, right? So this is very much a toy example. I did this to make it easy for everyone to understand. So you could see like that's why you can see for the margin for the job when it started, for the margin for the job, it because you're shorting, so you need to have margin in your account, right? And then as you start unwinding, right, as you start going long, you need less margin. You can just see the overall volatility for the stock. Let's see. I'm trying to make sure I answer these questions here. Let's see. Trading cost. Yeah, Avinash is asking about trading costs against actual profits with higher frequency. Yeah, so this is why eventually, I didn't put in the bid-ask spread here, but eventually you're going to want to have the bid-ask spread. I think Avinash is asking about, you got to think about the trading cost. Now, Alpaca doesn't charge you commission, which is great. So it's a little bit like Robinhood, but you still have the bid-ask spread. So you got to be very conscious of that. To contact, I think Robert actually has a contact form on there. And then also I'm actually on Discord right now. So you guys are welcome to go on Discord and chat away. So you could do that as well. Let's see, I know we're getting at the top of the hour here. So let me try to make sure I get everything covered. Let's see, no, that's not it. Oh, I lost my screen. I have too many screens open. Okay, so yeah, so kind of in the demo, let me go back to full screen here. Yeah, so I showed off some of the capabilities. These are not, again, promises of what your returns are going to be. We'll go over in the machine learning course, the kind of machine learning basics. What is machine learning? How does it work? We'll go over deep learning, which is really important because that's what you need to do. Like, for instance, if you want to take in like Reddit streams, like Wall Street Bets, take in comments there, or take Twitter feeds and feed that into your forecast model. That's what you're going to have to do. So in the course, the first part of the course is we're going to be building a stock forecasting model, kind of like the one I showed you. So you guys will be doing that yourselves, but you'll be personalizing it for your own trading strategy. Actually, London Trader asked, does your model vary for different stocks as each stock has its own personality? Yes, absolutely. So what might be a good machine learning model for one stock is not going to be a good machine learning model for another stock. Or type of stock. So you have to really do a lot of back testing to see. But this is also opportunity. So there's not a magic bullet. It's not like this one model is going to blow away, be great for all the stocks. That's not going to happen. This is why you're able to get an edge. Each model, what features you put in, how you train it, what stock you're using it on, is going to determine how accurate that model is. And so what you would do is you will train a model for a certain type of stock or a certain stock. And then what you'll do is you'll try to lower the error rate so that it's like the lowest possible error rate for whatever forecast you're trying to do. And then, live testing, the way you do live testing is use something called paper trading. So paper trading is like fake money. So on Alpaca, you can set your paper trading account to have certain amount of money, and then you start trading. But you never start off with like real money. Never. Okay. I can't emphasize enough. I've had some people who are just so excited to do a little bit of light testing. They jump into real money. They always regret it. So never do that. Just back test the heck out of it. Something. Do paper trading. Make sure it's solid, and then do live trading. Um, so yeah. It's about 6 o'clock right now, so just a few minutes over, but happy to stay on. I kind of went over some things fairly quickly, but I could go into more depth if there's questions. I also want to be respectful of everyone's time. So if there's questions, comments, I'm also on this Discord right now, so you could fire away there too. Yeah, does anyone have any questions or comments that I could try to help answer?
While we're waiting for questions, Greg, I just want to say thank you very much for your presentation. That's awesome. I think that's a really quick overview of some complicated topics that can really do some amazing returns and do some amazing things in the finance world. I know, by nature, you're not someone to boast, right? But those returns that you got for your customers, 40%, 42% annualized returns, that's absolutely incredible. I think, I want to learn from you as well, how you're doing this sort of machine learning stuff. And I hope everyone else kind of feels the same way that I do, or if they don't, I don't know why. That's crazy. But it's honestly, I think it's amazing what you're doing, and thank you very much for your presentation. So while we're waiting for questions, I just want to say that thank you for your time, and I think we got a question in, so I'm gonna step back. All right.
Oh, Robert, someone asked a question. Someone thought it started at 8, but it's recorded on YouTube, so I don't know if you could drop in the YouTube link just so that
Yeah. So let me drop in. I'm gonna drop in our YouTube channel, right? And there's also I'm gonna drop in our YouTube channel. I think it's pretty easy to find. I mean, we're literally live on YouTube right now, so it's like the number one thing that pops up. So here's our YouTube link. I'm gonna drop it into the chat here. So check out the link on YouTube. Make sure you subscribe to us, by the way, because we do these things pretty often. Whether it's algorithmic trading, whether it's machine learning, we're going to be doing options trading sometime soon as well. We're going to be giving out a lot of free content. So make sure you subscribe to us. But right now, you go on there, we're live on YouTube, right? So if you keep that exact same link, you'll be able to see this presentation over again. And I'm going to add in all the links to like our presentation, everything. It's all going to be in there. Also, we're going to send out an email and all sort of stuff with the recording to this presentation, and everything else that comes with it, the Discord links and all those things as well, right? So watch your emails, by the way.
There's another question from Lucian here. So the question is, someone can use this skill to start his own business. If so, that's amazing. So yeah, I mean, there's a lot of people who do day trading. Like there's a lot of day traders out there. I mean, just to go to Wall Street Bets, there's a lot of day traders. And I think the big challenge with day traders in general, I mean, some day traders, I can't say all, some day traders are able to earn a pretty good living just doing that. But the big problem right now with day trading is just, at least from the technical analysis type side, the people who use technical indicators, is that kind of day trading over the past 10 years, 20 years has really started to kind of fade away in terms of being able to make money because of all the algorithmic trading that's happening right now. Right, 80% of the market is algorithmic traded, and so a lot of the really easy money is just starting to whittle away. So it really necessitates it's like going to a gunfight with a knife, right? I think that's the saying, right? So 80% of the market has algorithms, right? You're using algorithmic trading, and you're going to there with like manual trading, and it's like going to a gunfight with a knife. It's just crazy, insane, right? It's really hard to do. So that's why even with the advent of guys like Alpaca and like like Python, you have Colab notebooks, you have Google Cloud with all its machine learning. It's like you can now bring a gun to a gunfight, right? you have a standing chance, and so that's why there's like an explosion of people interested in doing algorithmic trading. It's just because there's almost no other way to 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 do this, right? On a as on an individual basis, right? Um, Tom asked a question: have you ever used AI learning to track and learn how a prominent investor like Warren Buffett makes a decision and be able to predict how they will invest? So it's actually a good question. So machine learning is good at certain things, and humans are really good at certain things. So it has to do with how much training data there is. So if there's a ton of training data, then machine learning wins every time, right? But if there's a kind of a scarcity of training data, then humans win. So Warren Buffett is the kind of guy where he'll buy like Coke, and then hold it for 20 years. Um, and he doesn't do that much trading, right? He makes these really like trades, like big trades in, and he kind of holds them for like long term. So you can imagine there's not a lot of training data. There's a kind of a policy of training data for like long term type of trading. So most of what algorithmic trading is done on right now is actually the short term. That's why you do like trading every 5 minutes or every minute, or forecasting 15 minutes in the future. That's really where like machine learning shines, is the shorter term type of things. And the reason why it shines for shorter term is because you're doing a lot of trades, right? So there's a lot of training data, right? There's a lot of the machine learning models thrive when there's large amounts of information, and you're trying to figure out patterns with large amounts of information. So algorithmic trading is really, and not to be confused with high frequency trading, right? So there's high frequency trading, algorithmic trading, and then there's like manual trading, right? So manual trading tends to be really long time spans, like the Warren Buffett type of time spans, where it's like over the course of like a decade, right? And then high frequency trading is, and there's a really good movie on this, like the Wire Boys. I forgot. There's like where they're trying to build a fiber optic line through like mountains or something like that. It was a good movie. And there, what they're trying to front run the market, right? They're trying to get the latency down to like as short as possible. They'll put their servers right next to the exchange computers in New Jersey or something like that. So they do stuff like that. And that's not so much algorithmic trading. That's just, spending a lot of capital and getting, really great latencies. And then there's algorithmic trading, right? And algorithmic trading is kind of where it's kind of like in between. So algorithmic trading is like you're talking about like thousands of trades per second type of thing, right? And then algorithmic trading is usually on a minute scale, minute to maybe hour scale, and then manual trading is usually like a month scale, right? You're thinking about what to do. So because Warren Buffett doesn't trade that often, it's probably not the best machine learning problem, right? Very, very good question. And then Tom asked, that he asked that question. Okay, yeah, good. See, are there any other questions from anyone?
So Greg, there is one more question here, by the way, by anonymous under Q&A. Mm-hmm. But I want to ask you, because we've spoken to a lot of people on the phone about this, and machine learning being short term, that makes sense. But is there a way that you see machine learning being able to help inform longer term trading, right? Yeah. So not necessarily that it's trading on its own, but it can help you make better decisions.
Yeah. And in fact, that's actually a really good question, Robert. So I think everyone heard about like Deep Blue beating Kasparov a long time ago, like in chess. Like it was like the best. It was groundbreaking because computers had finally reached a milestone where it's better than the best chess player, right? And what's interesting actually is the really winning thing that's happening right now is it's not just all computers. It's like computer plus human is better than a computer by themselves or human by themselves. So actually, a good portion of the work that we're doing actually is not necessarily people who use the algorithm just to do pure trading, but they use the machine learning to actually assist them making decisions, right, on a more long-term basis, right? So there's definitely that ability, but the key is that they use machine learning to do what machine learning is best is, which is handling large amounts of data and figuring out patterns, complex patterns in large amounts of data. And then what humans are best is humans are really good when there's not much data, right? Not much examples, and you're trying to come up with some sort of insight. And humans are really good at that. So if you kind of marry the two, you get like incredible strategy. And that's actually, if you look at some of these large hedge funds, right? That's essentially what they're doing. It's just not just pure algorithm trading. It's not just pure human trading. It's actually a combination of two. They have traders who really know a lot about what's going on, and they kind of marry the two. So that's the future, actually, is that. Avinash asked another question, which is, is application of this is the auto trading like EA, as well as, actually, do you understand the question, Robert? From
I don't. Avinash, do you mind rephrasing that a little bit? I understand that might be EA stock, like auto trading, like I said, like auto, like I'm not sure. Avinash, I think you might need to rephrase it a little bit. I'm sorry. I think I'm having an issue understanding that. But there's another question here under Q&A, Greg.
Oh yeah, sorry. Actually, I have my panelist thing over that. Yeah. Okay. Yeah. So Tanya here asks, do you use feature engineering to look for alpha? Yeah. So just to be clear, so it's alpha is kind of like the term to use to have the edge of the market, right? In terms of like excess returns. So you could train a model to do that, to try to calculate alpha, right? That's definitely a possibility. So sometimes it's not the best to try to just do a plain forecast of the stock, right? So you could use machine learning to calculate whatever parameter you want, whether it's alpha or the closing stock price or whatever it happens to be. And so you could have it forecast that as well, right? Or calculate that, as long as you have ground truth. So it's just going back to my slides here earlier. Yeah. So as going back to earlier, right? As long as you have like some sort of label, some sort of ground truth, you could train the model. So if you have ground truth for alpha, you can use that to have the model predict what the alpha is going to be. So good question. And then Avinash asked the question here, is the application of this twofold: algorithmic auto training without human? Yeah. So yeah. So you could do algorithmic trading without human intervention, and that's more like that's a kind of really common thing where you're trading every minute, right? Because you're trying to pick up these pennies off the ground, and that one has to be without human intervention because like in the example I showed you, right? We made $80, but we placed, I don't know, probably 1,000 trades. We placed a lot of trades. We placed a ton of trades, right? So I mean, to do that manually, it would be kind of killer, right? You wouldn't want a human involved, but it's not making a lot of money per each trade, right? But because it did so many trades, it actually adds up even after the bid-ask spread. Let's see. Yeah, so for once where you have human intervention, like human in the loop, you wouldn't want to do that every minute, right? Or every 5 minutes. You probably want to do that like every week or so, or every month or something like that, because it's too much for the human to handle. Tom asked a question. You mentioned that 8% of the trades are now done by machines. Have you found that machines start learning, and what other AI trading machines are doing? Do they start competing with each other, or can you tell? So that's actually what's happening. It's like spy versus spy, right? It's bot versus bot. That's actually what's happening. Is these algorithms or these bots are actually like, so my dad, like, he's kind of like a amateur day trader, right? And he swears that somebody's watching him when he does a trade, because it seems he swears like, and truth is there are people watching him, right? There are basically bots out there who are literally watching every single trade out there, and they're trying to, because the stock market is a big zero-sum game, right? So everyone's trying to take money away from each other, right? And so there are bots out there that they're watching every single trade, and they're trying to like take that. They're trying to basically take the money away from that person. That's literally what's going on. So yes, the bots are out there. They're watching it. You could actually watch every single trade go by, and there are bots doing that. And just to like, everyone here has heard of Robinhood, right? So like Robinhood, right, doesn't charge commission. So everyone wonders like, how does Robinhood make money? Well, Robinhood does is they sell the order flow, because a lot of people on Robinhood aren't very sophisticated. So they sell that order flow, and it's kind of like they call it dumb money, right? So basically, the people on the other side of the Robinhood trades generally make money, right? So anyway, so yeah, but yeah, so this getting back to Tom's question. Tom was asking about, do the machine learning bots start competing against? And they do. This is literally what's happening. It's like this. There's this automated battlefield that's going on where these bots are trying to take money away from each other. So this is why some of the really sophisticated kind of triggers, like I talked about a trigger here, which is really simple, which is not reinforcement learning. It's just simple. It's a very dumb trigger, right? We call it a simple stock trigger, which is basically predicting prices higher, buy, lower, sell, right? Very simple. But for low float stocks, right? For stocks that don't have a lot of people trading on that stock, one of the triggers that people that kind of one of the cutting edge triggers is a reinforcement learning trigger. And reinforcement learning, so you guys probably heard stories about how like the best poker player now is a reinforcement learning bot. Or here's an even more famous example. Everyone heard about like Go, right? A few years ago, AlphaGo, like the Google machine learning, reinforcement learning, beat the world's best Go player, right? I think that's the last human game that hasn't been beat by a machine. There might be some video games, but I think pretty much right now, like pretty much any game, a machine can do better than a human. And the reason why is because they use a technique called reinforcement learning. And like in case with AlphaGo, what they do is they have AlphaGo playing itself, right? So the fuel for machine learning is data, right? Lots and lots of data. And with reinforcement learning, what's happening is you're having one AlphaGo play against another AlphaGo. They're playing like a gazillion games against each other, right? And so they get smarter, right? So they generate their own training data, right? Which is really cool. And which is a big problem, by the way, in time series forecasting, because with time series forecasting, you can't generate more training data, right? You have the finite amount of time, right? So that's a big challenge with like time series forecasting. But with reinforcement learning, what's really cool is you could let these bots play against each other, right? And so this is what happens on low float stocks when there's a low number of participants playing. Basically, you could set up a reinforcement learning to basically simulate everyone playing against each other, and so they could actually get better and better and better. So that's a good question, Tom. That's really, you can't do it in a high float stock like Google, right? This is too highly traded. There's just too many players. You couldn't simulate all of them. But a low float, like a very, very low float stock, that's the strategy, right? Is to use reinforcement learning, and that's why they've used like reinforcement learning like for poker, right? They use it for Go. They use it for like when you don't have crazy number of participants. I've even heard that they use it for like video games like StarCraft, or I forgot the name of the game. They have it. I'm not a big video game. I used to play a lot of video games, but I haven't played it recently. But there's like some of these massively multiplayer games, and like these reinforcement learning agents like just kill everyone. They just win. Like, a good question. Oh, London Trader asked, how long and complex do these programs become? So what's actually really interesting about machine learning is in the software engineering where people look at how many lines of code are there, right? In the machine learning, I should go back to the code just to show you what it looks like. So where is it? Oh my God, I lost my window here. Okay, I don't know. Okay, let me stop my share and see if I can find the window. I have 8 monitors going on here, so I lost where I put the Colab notebook. Let me see if I could find it again. Oh, here it is. Actually, it was just on a different tab. Okay, sorry. Let me share my screen again. Oh, now I lost my video window. Oh, here it is. Okay. Okay. So that's one. If anyone from Zoom is watching, one works for Zoom is handle multi-screen better, because there's guys like me who have like 8 monitors going on and I lose the window. Anyways, let me show you the actual training. It's like literally one line. So look, the training is literally just one line. So what's really interesting with machine learning is the amount of real code is not a lot. It's the data, the training of data. It's how you present the data, the model, the training data to the model. It's not actually, in terms of lines of code, a Python code is not a lot. It's largely about the data. If you think about like a teacher in a classroom, right? the teacher isn't opening up the heads of each student and saying, okay, this is how I wire the neurons. She's not doing that, right? What the teacher is doing is she's presenting different training examples, right? Back to my little diagram here. She's presenting, like examples, right? She's presenting like training data, right? She's presenting like, here's examples of how you solve an algebraic equation. Here's example of how to write an essay or whatever, right? And then making the machine learning model smarter, right? That's what's going on. And so in terms of lines of code, there's not actually a lot of lines of Python code, but there's a lot of training data. The training data is the fuel, essentially. So it's like, what a better question is like, how much data is there? But that's really what's going on. That's how you program this. The input is actually the data, the labels and the data. The actual number of lines of Python code is actually relatively little. So what's actually kind of interesting with machine learning is there's actually less coding going on with machine learning than there is with traditional software engineering. With software engineering, you're explicitly telling everything, like if this, then that, right? In machine learning, you're not. It's all about the data. You're munging the data. You're trying to do all this kind of stuff. Yeah, I lost my chat window. So let me try to bring up the chat window again. Okay, and then Joseph asked, can we apply this to option trading? And absolutely, yeah. So in fact, that's why we support interactive brokers, because one problem with Alpaca is they don't have option trading. And so interactive brokers does, but it's not free trading. So it's a bit of a trade-off. But option trading is, yes, very, very common, right? That's a lot of the algo trading is based on, in fact, I would argue a lot of the option trading today is actually algorithmic trading. There's a few people who do it like, manually, but a lot of it is all algorithmic traded. Let's see, Tom here asks, so how long does it take for reinforcement learning algorithm to learn a new pattern when it occurs? For instance, when COVID hit, patterns changed significantly. Now it may be closer to normal. How long does the training data need to be to capture the change in the new trend? So good question, Tom. For reinforcement learning, which is a different question than the second question you asked. So reinforcement learning, if you read the papers on like AlphaGo, it played like 1 million games, right? Like like maybe more than 1 million. It played like a tremendous number of games against itself to become smart. Lots of computational power needed for that. But reinforcement only really works well when it can play itself, right? If it can't really play itself or simulate it playing itself, like if it's not some sort of game, reinforcement learning doesn't work as well, because it needs that kind of feedback to know whether it's working or not. And then the second question is really a separate question, which is how long does training data need to be? So this is also why machine learning tends to be more used on short-term type trading, is because you need enough training data for the model to pick up the pattern. How long it has to be depends on how complex the pattern, how subtle the pattern is. So it really depends on the pattern you're trying to detect. But more data, the better, right? You can never have enough data for machine learning, especially if you go deep learning. London Trader asked, how do you decide on the data to use or not use? Do you risk of analysis paralysis? So it's actually a good question. So that actually kind of happens with machine learning models. Just as a human, if you overwhelm a human, the human starts like not really able to pick up the pattern, right? It gets lost in everything else. So machine learning models also suffer from the same thing, where if you try to stuff in too many features into a model, the model doesn't perform very well, right? So it's very much like a human, like overload, right? If you overload the model. So that's why you tend to have to start using bigger models. But in order to have bigger models, you have to have more training data. So it's kind of like catch-22. So you have to, this is the hard part of machine learning. It's not so much writing that one-line Python code. That's pretty easy. The hard part of machine learning is actually getting the data in the right way, presenting the data. It's like a teacher giving out a homework assignment or giving a lecture. The hard part isn't telling the model to fit it. That's not the hard part. The hard part is getting the data in a way, the training data in a way that the model could pick it up and learn from it. That's the hard part. But it's a good comment, Leonard Trader, in terms of um, analysis paralysis, because that does happen. That does happen to models, just as a human does. If you tell the human, here's a million different things, figure it out, not good. If you think about what a good teacher does, a good teacher will kind of focus in on specific things and make sure they get that right. And the other thing a good teacher does, and this is also really important, I think there's actually a lot of parallels between being a good teacher and being really good at machine learning, right? Because what you're doing is you're trying to teach the model something, right? So what a good teacher does also, the good teacher might do like pop quizzes, right? To make sure the model actually is learning it, right? And or having a good final exam, right? Or whatever, right? So that's the same thing that you do with your model. It's like there's a lot of testing, right? Avanish, actually first, Lucen asked, do we need to do PCA? So PCA stands for Principal Component Analysis. So for deep learning, you don't need to necessarily do this kind of dimensionality reduction like with PCA. So PCA is a way to reduce the dimensions, right? So what happens is, it's like, let's say you try to feed in 1 million features into a model. The model just runs out of capacity, can't figure it out. So you use things like PCA. And there's a bunch of other ways to do dimensionality reduction. Now, what's interesting with deep learning, right, is that it will kind of do the feature engineering for you, things like PCA. So this is getting kind of advanced, and Lucian, we're probably losing people in the audience here, but anyways, that's a good question, Lucian. Avanish asked a question of, how do you find good training data sets? And is it tied to each instrument? Yes. So the instrument that you're training is really tied to, like, a good data set is really tied to that stock, right? So maybe if you're trading an oil stock, you want to look at other oil stocks, or you want to look at maybe some geology report or something like that, or maybe the amount of cars being driven. I don't know, right? Whatever it might be. But yes, so this is why it's possible to get edge with machine learning today, is because there's so much, unlike technical analysis, right? There's only so much you can do, and pretty much anything you do, it's already been coded up in some sort of bot, right? But the great thing about machine learning is it's like the Wild West, right? There's so many different ways to get an edge, right? You may have an insight about a stock that nobody else has, like, but you just need to be able to automate it. You need to be able to automatically get that pattern, because like it's pretty hard these days to make a killing on a stock. I mean, it's really hard. I mean, you could try, but it's hard to get but usually you can make some money, but it's hard to make a killing. Like it's hard to make like a gazillion dollars. And that's why that's the motivation for algorithmic trading, is because you can be picking up pennies. And if you pick up pennies, you need an automatic way of doing it quickly, right? Because you don't want to be, spending hours making a penny, right? That doesn't make sense, right? You might as well get a real job then, right? So Tom asked a question of, have you ever used frequency domain data like Fourier transform wavelet in conjunction to time domain? Absolutely. No, this is actually what you do, right? Yeah, you do that. You will it's like, if you look at speech recognition, that's actually how it works. So speech recognition, they'll transform the time domain into the frequency domain, and then you feed it into the machine learning model, right? So that's literally what you do, right? And you'll do that. It depends on what you're trying to do, but you would do that as well. You probably wouldn't just do that on the stock price though, but you may do that on other features that you feed into the model. So it's a very good question, Tom. Let's see. Avanish also asked a question is, so it's perpetual work as it's a perpetual work in progress. Wait, let me see. What is this question? Avanish asks, so it's a perpetual work in progress as time progresses. Okay, well, Avanish, I think the question, I'm not going to read it exactly, but I think what you're asking is, do you have to keep training the model? The answer is yes. You got to keep training the model. And also, the world's full of smart people who also know machine learning. And so what works today wouldn't always work forever. So that's why you have to keep on innovating. You have to keep inventing other features, keep on training the model, keep on trying to find the edge, because there are a ton of smart people who want to make money on the stock market, and you compete against all of them. And so, people eventually figure out some sort of ideal trading strategy, and everyone else knows, and then all the profits are kind of taken out, right? So yeah, so it's definitely like a cat and mouse game. But the great thing about machine learning is that it's very new, it's very cutting edge. So it's much easier to get an edge than if you're trying to do manual trading. If you're trying to do manual trading, God help you, right? It's like, it's really really, really hard, right, to make money that way. I mean, you can, but it's hard. You have to have like some sort of insider trading tip or something like that, or I don't know. You have to. It's hard. And then Sky asked, do you only do you use only the market data like pricing, volume, or other economic data? No, I mean, I think Sky, the question is for these models, the whole point of it is to actually use data that is not very common to be used, right? If you want to get the edge, you got to use other kinds of data, not just the plain Jane data that everyone else uses. That doesn't make sense. That in order machine learning, what you're doing is you're using something that most other people are not using. You're trying to get that edge, and that's what's important. Is to use non-traditional type of data. I mean, you still use some of the unemployment, consumer sentiment, all that traditional data, but you want to be using something that gives you that edge. Maybe it's following Elon Musk on Twitter, right, to trade at Tesla as an example, or something like that, right? When you keep training the model, how do you know when to go back and paper test, to back test or paper trade? Yeah, so like in our in the thing I was showing you earlier in our application, we actually have a thing where if the error rate becomes a certain level, it becomes kind of high, then you do the retraining. Now, one argument for doing a lot of retraining on machine learning is that you have to pay for the computational cost. And for some of the really sophisticated, like NLP type of machine learning, it could get pretty expensive. So you got to be kind of judicious. How often do you retrain your model? Otherwise, you start paying a lot of money to your cloud vendor, right? Okay. I don't know if there's any other question. I think I got all of them. Did I miss anything, Robert?
I think that's all of them. This is amazing. You guys are asking a lot of questions. This is absolutely great. Honestly, guys, if you want to keep asking questions, like this is what the course is all about. Imagine 8 weeks with Greg. You guys can ask tons of questions like this. Not only is he going to be teaching a course, but you can keep him and keep asking questions and keep learning stuff. And I know that's exactly what I want to do. Like I have a million different questions too, just like you guys. So if you guys join the course, that's exactly what you're going to be able to do. 8 weeks. He's going to not only teach you the curriculum, but you're going to be able to ask these types of questions, not just for your own curiosity, but for you guys actually being able to build your models and make some money. That's what this is all about, right? So honestly, guys, I feel like we could do this all night. It's amazing. I love all the questions. I think it's Greg. Every time we do something with you, it's like there's a million questions being asked. I have a feeling we're gonna have a very, very full class. So if you guys want to sign up for Greg's class, make sure you guys sign up because I'm sure it's gonna be very full very soon. We're getting quite a few people signing up quite quickly. People love the bundle, by the way, the bundle with the algo trading and the machine learning course. So make sure you guys sign up. I saw a comment here that the chat that where is it? I can't bring up the chat. Oh, there it is. Off to dinner. I look forward to this course sometime in the fall or late summer. We can't guarantee that I mean, we'll ask Greg. We'll see if Greg wants to host this thing again in the summertime or not. But the course is coming up in the end of this month. So if you guys want to join, make sure you guys join. We don't currently have another course set out yet. With the algo trading course, we do it like once every 2 months or something. With Greg, I don't know. We got to ask Greg. We like if you guys want to do it again, you guys got to convince him to do it again, because this is a one-time thing so far in March. If you guys want to do it at different points in time, I don't know if that's available. So make sure you guys sign up. This is going to be an absolutely amazing course. Not only are you going to learn from a lot from Greg, but you're going to be able to do this sort of thing. Like this is the cool thing, right? The fact that you get to ask him questions and you're building your own model and well, how do I do this and how do I do that? Like this is the whole point of the live class, right? So guys, make sure you guys sign up. Greg, I'm going to share my screen really, really quickly, and I don't want to keep everyone for too long.
Sure.
But essentially what we want to do is go to lumiwealth.com. You guys can see my screen, right?
Yep.
lumiwealth.com. You're going to scroll down a little bit, and you're going to go here. It's the middle one, machine learning for finance and trading. You click on that, right? And you can scroll down here. You can learn about our different plans. These are ones available. The middle one right here, I know we have popular under live classes. That's because most of our classes are live classes are popular. The most popular one so far, I could tell you, is the bundle, the algorithmic trading and the machine learning. And you could go see bundle, and you can basically purchase the date. There's only one date on this one. So this will take you to the purchase link, and you can actually go ahead and reserve your spot, right? Because we're not going to have a million spots. You know, we want to keep these classes small. So if you guys want to sign up, make sure you guys sign up, because this course is coming out very soon. All right. That's all I want to say. I know there's more questions coming up. This is crazy how many questions. Once one becomes proficient in training, is there a payment plan? Absolutely, there's a payment plan. You're not paying $2,700 up front. It's $900 a month for the two together, and there's a payment plan of $833 for 3 months if you want just the live classes with machine learning. So it depends on which one you want. If you want just machine learning, it's $833 per month. If you want the machine learning and the self-directed algo trading, then it's $900 a month, right? So there's a payment plan. Right. Let me see what else there is. We have a lot of questions today. This is Greg. Every time you present, you have tons of questions. That's amazing. I think this is very awesome. Clearly, we have a lot of interest in this topic. What if I only know how to switch on a computer? Is that still an appropriate course? Yeah. So London Trader. If you want to, so there's a lot of people that join our algo trading class that don't know how to code at all. I would recommend that you pick the middle option here, the machine learning and the self-directed algo trading. In the algorithmic trading course, we will teach you how to code, right? You don't need to be some computer whiz or anything like that. We'll teach you how to code. That's you know, it's a much more basic course. We'll teach you how to do that. You get the self-directed class, you go through there, you learn how to code, and then you can take Greg's class live, and you can go through all that sort of thing. So there's no need for needing to know how to code. But if you don't know how to code, I strongly suggest you pick this middle option right here, which we will walk you through first how to code and how to do all that sort of thing before you actually jump into Greg's class. All right. What other questions do we have here? So I guess it's the same question. How proficient do we need to be at Python to attend? Again, machine learning is not the simplest thing in the world, but it's definitely something that you can learn, and it's not crazy at all. If you guys want to take Greg's course, again, I'd very strongly suggest, and this is why we made it, by the way, this middle plan right here, machine learning and self-directed algorithmic training. Take this one. It's only $200 more, and you get the entire algorithmic training course as well, all the recordings. So you can take that class. You guys will come out of it being stellar at coding, being very good at, you'll be able to make your own bots coming out of that course by itself. And then you'll be able to go into Greg's course and be able to actually advance in that. You don't even have to take the entire algorithmic training course. You can just take the first, 4 weeks, the first 4 classes, and then you'll be able to do what Greg's doing. It's not rocket science. You need to know some basic programming, but we can teach you that if you take this bundle, and that's all included, and you'll have access to all of that together, right? So we have that there. I think that answers this question. What's the difference between the second and third plan? So this one right here, this is if you want to have one-on-one tutoring, right? If you want to have like help with your project, if you want to have myself or Greg actually come on the phone with you and go through that sort of stuff, this is that plan that you want to do. If you want to have something built out for you, customized, or if you want to have one-on-one training from someone on our staff, that's what the project help and tutoring is. You're going to get everything from this, like these other 2 ones, you're going to get everything from there. Plus you're going to get one-on-one help from our team to actually make sure that you're learning this. So that's the difference between the second and the third, right? How do we get in touch with y'all if we have more questions later? So you can reach out to me. I'm going to type out my email here, rob@lumiwealth.com. You could also get on our Discord, which if you scroll up a little bit, there's a Discord link. Greg's on Discord. You could talk to him there. I don't know if Greg wants to share his email or not. I don't know how comfortable you feel with that, Greg. But
you can just, if you want to, you can. I'll put it on the chat too. So
okay, cool. So we'll add Greg's email as well, so that yeah, there you go. GLT@pika.group, right? So you have both of our emails. Make sure you save them, because this is going to disappear very quickly. There's one thing I've learned about Zoom is as soon as you turn it off, everyone keeps asking, where's the chat? Make sure you save it, right? Because then it's going to be a pain to get around and send that around. So save that there. So if you have questions, you could definitely ask us. We could also get on a call. I have no problems getting on calls and answering any kind of questions, but email is probably the easiest, or going on our Discord group, which I have open right now. There's, we're both on there, Greg and I, if you want to ask questions. Hopefully it gets through everything. This is amazing. You guys, lots of questions. This is awesome. Clearly there's a lot of interest in this. Greg, I think it's fantastic. Thank you again for your presentation. Every single time we do this, I feel like I've learned something more every time. I think, guys, no problem. Honestly, I highly recommend that you guys join this course. Like his clients are making 42% a year. I think that's enough said. If we just had the one highlight thing to be part of the course, I think that's the main thing. Obviously, legal disclaimer, but I think it's amazing. Obviously, machine learning is the future. It's doing really well for self-driving cars. It's doing really well for recognizing speech and all sorts of amazing things in the world. Why can't you apply that to world of finance? Like, imagine if AI can drive a car, create Tesla and all that sort of thing. Imagine what it can do for your trades. That's kind of the last thing I have to leave. And no better person to teach you than Greg, someone who's actually doing this. He's been doing it for a while, well funded. I don't think there's a better person to learn from than Greg. And I guess you guys proved it by asking so many questions. But yeah, guys, remember, sign up. The course is filling up fast. We don't have an infinite amount of spots, and it's starting in less than a month now. So make sure you guys sign up so you actually secure your spot. All right. Cool. Awesome. I think that's it for the questions. Thank you very much again, guys, for being part of the webinar. I appreciate you guys so much. I love every person that signs up for a webinar. I love this. I love people actually. Don't you appreciate this, Greg?
It's great. Yeah. No, thank you, Robert, for the opportunity, and thank you everyone for attending. I really appreciate it.
Yeah. They came here for you, Greg. That's what it is.
Awesome.
Awesome. Thank you, guys. All right. Hope you have a good night, and hope to see you in the course. I'm going to be part of it. I hope you guys are too. Cheers.
Okay, bye.